Should you pay points when you obtain a mortgage? My name is RJ Baxter with Intercap Lending. I'm going to talk about that question in today's video and really dive into the pluses and minuses of paying points right now on a mortgage. So first of all, what are points? What does a point mean? Basically, 1 point is equivalent to 1% of your loan amount when you obtain a mortgage. So let's say you obtain a $500,000 mortgage. 1 point is $5,000, and that's basically an upfront fee that's charged in an effort to obtain a lower interest rate. So basically, by paying that upfront money, you're going to have lower interest payments over time. So the argument is, over the long term, the lower interest payments are going to far exceed the cost of those points. But it's important to look at what your break-even point is. So taking that previous example of a $5,000 upfront fee to buy 1 point, to buy down the interest rate. Let's say you save $100 a month on the payment, just to keep the math simple. That means you'd have to have that mortgage for 50 months just to break even on the cost of those points. So that kind of goes into my reasoning on whether it makes sense right now on whether you should pay points to get a lower interest rate. And in my opinion, it does not make sense right now to pay points. The reason why is that interest rates are more likely than not to go down over the next 1 to 2 years than it is that they're going to stay high or go higher over the next 4 or 5 years, which is what you would need in order to recoup that cost of those points. Because if rates come down in the next 1 to 2 years, you can refinance into a lower interest rate and get that rate permanently and not have to pay those upfront points to get that lower rate. And if you pay the points now to get a lower rate, you might end up refinancing anyway in 2 years, and you would basically have just wasted that money that you paid up front because you're not going to be in the loan long enough to recoup that cost in the form of those lower payments. Now, of course, there's no guarantees that rates are going to go down before you would recoup the cost of those points. But historically speaking, it's likely that this is going to happen. In these cycles when interest rates go up, usually it leads to a recession. The Fed is trying to fight inflation and bring inflation down with these higher rates, and inflation is starting to show signs of coming down. And in those types of environments, interest rates tend to improve. So that's just my opinion. Again, no guarantees that interest rates are going to go down in the near future. But that's the reasoning behind, in my opinion, not paying points right now. Now, if you'd like to look at your options of points versus no points, look at what those different payments look like and what those costs look like, I'm happy to run those numbers for you. So just give me a call, and I'm also here for you with any other mortgage-related questions. Once again, my name is RJ Baxter, Intercap Lending. Have a great rest of your day.